Good morning. We're here in London at the Digital Assets Forum. I'm Alona Stein, co-CEO at ReBlonde and PR agency. With me now is Joey García, head of digital assets at Xapo Bank. Good morning, Joey.
Morning, how are you?
Good. How are you?
Very good, very good.
How
Great
was
to
your
be
trip
here.
here this morning?
Yeah, very good. Nice and easy. Always cold in London, but
Always
can't
cold in
complain.
London. Yeah. So you want to tell us a bit about yourself and your position at Xapo Bank?
Yeah, sure. So I'm a director of Xapo Bank. For those guys who don't know Xapo, I mean, it was the original Bitcoin custodian. Going back to 2013, we call it the Fort Knox of Bitcoin back in the day. We sold our institutional business to Coinbase in 2019. Around 900,000 BTC in that transaction. But think of Xapo as having been there at the beginning, the original, call it wallet provider, the original cold storage facility using our crazy nuclear vaults in Switzerland, all the way through to the first sort of card issuance program. Visa, we're principal members of Visa, MasterCard. Back to link to your Bitcoin wallet address. First to get the EMI license, so the electronic money license. So then we've progressed all the way through to becoming a bank, so a credit institution, blockchain integrated and Bitcoin native. So, I always say, some people, you hear about banks exploring the space. There's one thing about a bank exploring the blockchain space, and another thing around a blockchain business that's become a bank, and that's what we are. So we're extremely native in that space. It's been an amazing trip so far. We're doing a lot of exciting stuff.
Very exciting. Banking as a service all of a sudden just becomes a frame of word that everyone is using. So you guys have released last week a report saying that stablecoins are on the rise.
Yeah.
Management. You want to talk a little bit about that?
Yeah, sure. I mean, it's a really exciting ecosystem that's developing in the world. People call it crypto, they call it DeFi, they call it Web3, they call it whatever they like. The reality in the world is that you've had this sort of ecosystem that's developing in the space, and then you have this other ecosystem, the financial services world. Call it the classic world, classic banking providers, the classic ecosystem. And we keep talking and preaching about the sort of convergence of the two systems together. I mean, last week I think the Goldman guys, Goldman Sachs released a report talking about convergence and sort of planning integration. Actually, the CEO of the Bank of America said the same thing. Again, I think last week he talked about the Bank of America exploring the use of sort of stablecoin or blockchain-based integrations to the bank. So that all sounds wonderful. In the classic banking world, it's not that easy to do. I also, if you have a country that issues a CBDC, and if that were to happen, that's wonderful for the Bank of England to do that, but the actual banks need to figure out how to provide your wallet integration services or ways that they can integrate to this new developing world. And that's what we did with the stablecoin sort of universe. So call it sort of future-proofing the convergence of bridging, I call it, of those two ecosystems. And of course you're seeing volumes. If you have a trading platform, if you have an account, on staking platform A, exchange B, whatever it might be, that's one thing. Now, if you want to then enter into a transaction where you've made some money, let's say, and you want to sell some of those assets and interact with a bank account to pay for your flight or your kids' school fees, that's not that simple. Banks have created different there can be limits on the order size or volumes per month, so that there's almost like a fractionalization, and we've done the opposite. We're sort of converging the two ecosystems together. So that's what's driving, and it's a long-winded answer to your question, that's what's driving, I think, some of the growth there.
Yeah, in a way, it's kind of like bringing these ideas and these concepts to life by actually making it a real.
Yeah, and if you trade on a platform or you do something interesting, at the end of the day, you want those assets to be secure. All the trading platforms that exist are not regulated as pure custodians to look after. It's not the same holding $50,000 worth of assets on an unregulated protocol to a deposit guarantee scheme issued bank account. But of course, allowing you a way to interact in and out of that ecosystem. And that's what stablecoins allow. We have that obviously integrated to your bank account.
Very interesting. In your panel earlier today, you spoke about regulatory spaces, some use cases that we expected. You want to share a little bit of your insights and thoughts from that conversation?
Yeah, look, I think everyone wants to talk about mass adoption. Everyone wants to see retail adoption. Everyone wants to see it integrated into everything. And I think
They want to see their parents paying with Bitcoin.
yeah, they want to understand. But what's blocking people from doing that? To an extent, it is regulation. There isn't enough of a comfort factor as to who your counterparty is. So most people interact with. So in the olden days of due diligence, you might walk into the office of a bank or the office of a business and look at the building and get a sense and do some basic DD. That's if it's higher value, you would do that quite normally. If it's a fund and you're investing in a fund, of course you do some sort of due diligence on the fund and the manager, who they are. In the crypto world, that doesn't really work. It doesn't really exist. It's more like the quality of the website, who the influencers are talking about this and the other, how many followers they have on Twitter, whatever. That sort of stuff. Yeah, it's all noise. So the regulation is something of like a standard setter, saying this is a secure enough ecosystem, and it's a secure enough standard that's going to allow people to access it in a friendly, sort of compatible, compliant, in a safe way. And we're massive proponents of that. And I think that's where the pressure points are coming. Like, it's an innovative ecosystem. It's really exciting. There has to be a balance. We never want to see regulation, stifling innovation or restricting it completely. But at the same time, the hardcore crypto industry that say governments and regulators aren't going to exist in 2 years' time, that's cuckoo land. I mean, that's not. So finding the balance, and I think that's really where the battle is the wrong word, but that's where the focus with the policymakers and the authorities should be. What is the balance so we can identify and deal with your risks in a way that allows us to develop an innovative new ecosystem? That's really what we're pushing for.
Thank you so much for your time. That was
Thank
so
you.
interesting.
Very
Thank
good.
you.